All right, it's Wednesday, April 23rd, and your screen is not broken. You should see a blank black screen because what I'm about to do is something you don't get to see often. You're going to see my personal reaction to how the markets performed the rest of the day after checking in on them this morning. And I'm going to prepare for my ES trading for tomorrow. So let's dive in. This is my honest reaction. I haven't looked at the weekly chart all day since the morning. Here we go. Weekly chart. All right, we are definitely up higher after 3 days so far this week, right? We have 2 more to complete the candle. However, notice we have not taken out the high from either last week on a close basis. We tested it by a couple points, but more importantly, the range from the week ending April 11th is kind of containing everything. So yes, things look stronger, but they're not like super strong. And here's what I see in the daily. So for the daily, I'm going to just change this to a daily time frame. The daily that's marked up and has all my full analysis is reserved for my S&P Edge Pro members. So let's take this and go to the daily time frame. All right. So a couple things that you can observe, and I'll give you a few nuggets to add to your chart. One is a falling trend line connecting the February 19th high and the March 26th high. So if you're trading ES or SPY or anything in the S&P 500 realm, I would definitely watch that because I do think that that's a short-term upside target, but we may then see the market pause there. What I don't like, again, this is my initial reaction, is how today we ran up but then pulled back. This is within a consolidation, but this essentially forms a type of candlestick that is bearish in implication. And heading into May, I'm going to go really deep on candlesticks, get inside candlesticks, and you'll see more about that in my Gann candlesticks trading system. And what I'm actually going to do is extract some levels from the candles for potential resistance for tomorrow's trading. Now, before I do that, let me comment on a couple other things here. One is we are in that consolidation mode, and the RSI power zones are essentially recovering from the oversold territory. So even though things are looking good with 2 green days, notice we haven't gotten above the bear resistance power zone since, February 19th. So right now, this is not looking like a super strong rally to me. I do think there's potential for further upside over the next couple days, potentially, but really we need to watch the short-term action, okay? Now, I'm going to bring this to a 60-minute chart. Again, not my full chart that's for my S&P Edge Pro members, but still a 60-minute chart, just so you can see my initial reaction. All right, so zooming in and collecting more data so that I can see the most recent low and so that I can see the most recent high. Notice how basically we've just been in this range between the April 2nd tariff announcement high, okay, and the low that followed that we've been recovering over. So these two ranges define what has been the boundaries capturing everything happening. So you could get like, it's like a roller coaster, right? We're up, we're down, we're up again. But with the latest up again, we've just really retested recent resistance and then started backing off. Now, a lot of this action ties to commentary on tariffs. It can be from President Trump. It could be from cabinet members. It could be from Fed members or other leaders of other countries. So I remember trading earlier this morning and there was like a pop out of nowhere. It wasn't a news moment. It was just like a huge bar in the 15-second chart. And my response in my head was somebody must have said something. But the cool thing is, the chart still played out and the upward momentum from earlier in the morning was still beneficial to follow into 10 a.m. Okay. So on this 60-minute chart, I'll give you a couple of levels to check out. The full analysis will be for my S&P Edge Pro members, but here we go. I don't like that we came up to this high at 549775 and tested it by 2 ticks and backed off. That's not great. However, that alone doesn't mean that we're going to see substantial weakness. There are gradients of how far down we may go. So far, how much have we retraced? About 25%, a little bit more than that. So the 50% retracement of the move off the 5127.25 low is an important support. That's also very close to what would be closing the gap, 5332.25. Okay, so this is a support zone. If you're a short-term ES trader or looking for a long entry, maybe a pullback here will hold. As for resistance, if we're able to resume higher and keep the party going to the upside, well, that's where I'm going to change this back to a daily chart, okay? And you can see that the next resistance is this high from several days ago, 552875. That is the high from March or April 10th, okay? So that April 10th high also coincides with that trend line that I showed you. So overall, there's room for this volatility to continue and for us to get opportunities, especially if you're a scalper or short-term trader. But I personally don't think we're in the clear of the whole tariff uncertainty being over based on what the charts are telling me, okay? Room for further short-term upside, but the party's not over. So hopefully that was helpful to you, whether you trade the S&P 500 directly or not. My name's Hema Reddy. I use analysis like this, price action, momentum, and market timing or forecasting to boost my trading, that and my tribes. I actually shared in my S&P Pro report a forecast today that helped keep my traders on the long side of the market. And so that full details are in my S&P Pro. I publish these multiple times a week. So if you're a short-term trader of the ES or the SPY, you got to check it out. So if you found value in this video, drop a like, a comment, subscribe, and I'll catch you soon.